Introducing XCredi LP staking from industry-leading RWA loan collateralization platform Credify. Earn 10% cashback in USDT after 90 days, with more rewards coming soon for XCredi holders. Visit v2.credify.finance to
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a couple of minutes past 1100 UTC. A big shout out to everybody joining the stream live today, and for everybody joining on catch up. A big special mention as well to everybody that came back for my first live show. A little bit more impromptu. I had intended to take some leave after coming back from traveling, but the truth is, in this industry, you know, it's no sleep season at the moment. So more than happy to do my part for that. Gio, my friend, how are we doing? We missed you on Monday. Hope you've been keeping well. So yeah, a big shout out to everybody. I think 4,000 people came out for that, which was really, really nice. We had a brilliant session, lots of good questions, and, you know, really covered some kind of good topics. So today we are diving deep into our altcoin Wednesday. Things look hot and things look like they really are about to pop. Joe C. Siolek, Ulukwezi Malogo, my friends, how are we doing? So I just wanted to start with Bitcoin. Not going to mess around today. We are just going to rip through some charts. We did a big educational based session on Monday, giving you the ins and outs of my theories, which are nothing overly complex, looking for liquidity above old highs, old lows, and within gaps. And what I wanted to cover today, just one little thing, is how candles can really kind of give us immense insight into what price is looking to do. Greg, good morning, my friend. So just going to go through this very quickly, just while we let the kind of numbers build in. Got hundreds and hundreds pouring through, which is really, really cool. And we're taking requests today, ladies and gents, so please do put them in the comments if you would like anything looked at. I will note them down on my magic sticky pad for anybody that's aware of the old post-it notepads. We keep it old school here, so that is how we roll. So just quick description on what's going on here, right? Is we had a daily inside bar pattern. An inside bar pattern, you can find it on my Twitter account pinned at the top, is a very, very tradable pattern. One of the first patterns I learned to trade, more based around traditional markets, but is applicable in any market. Really, an inside bar is just symbolizes where a market is starting to slow down. When a market starts to slow down, it has a tendency to range. And when it ranges, we normally get, let me show you a very quick example of this one here as well, right? What we tend to get when price ranges is, believe it or not, are ranges, right? So what you get here is you need the first candle to be the larger of the two candles, and the second candle has to just be, cannot violate the high or the low of that. Then we settle into this, and all of a sudden we have our inside bar pattern. Now what we do is we then slap that down onto a lower time frame, and quite simply the range that we create gives us everything we need to trade, right? We deviate the low, fail to come back in, close within, we trade to the midline. Notice how price holds the midline here, yeah? Let me turn our good friend Gio's indicator off. So Gio, who you can see in the comment there, the legend that made this indicator for us for Trade Club. It's our specific intraday trading club that we have, based around a little parody of Fight Club, for any of you that know the film. So obviously, first rule of Fight Club is nobody talks about Fight Club. First rule of Trade Club is everybody talks about Trade Club, right? If you want to come along, be part of it, then please, please do. You can find all the detail down in the descriptions. Now, back to this, right? So price spends most of its time in a range. Yeah, actually, people get obsessed with the trends, and I am obsessed with the trend as well, as everybody should be. But it's just, you know, that's how price works. It consolidates more than it expands. It consolidates much more than it expands, right? So when it's expanding, then we're in a trend. But most of the time, you're looking for liquidity to be played both sides of the range. So quite simply, when we can establish a good range, yeah, if we get a deviation, always and will always in my life think of the legend SZ for that. Nobody says it better than him. And nobody, in my opinion, trains ranges better either. When we get these deviations, price comes back inside. Our expectation is that price visits the midline. A decision is made at the midline. We either recover that area and move up, yeah, waiting for this breakout, or we lose this area and then we move down, okay? So we can see what happened here. We had the deviation. Price found that nice point in the midline. And you'll often see these types of move from price as well. Apologies for the kind of croaky voice. It's still not fully returned after Singapore and Dubai. You see these kind of moves where you hold and then you get a sweep to the offside here, right? Now, this is inducing the market. This is bringing people to the opposite side of the market to take liquidity before the real move happens, right? That's why you hear so much in this industry, people saying, you know, oh my God, I just had the right bias here. I knew price was going up here, or I thought price was going up here, but I got in here, my stop loss was a bit tight, I got trashed, and then this move just simply didn't give me a chance to get in. That's the nature of the market. You can see even when reclaiming this level here, people that maybe got in here with a tight stop were taken out here, and people that got in with a tight stop here were taken out here. It's the nature of how these markets work. So I'm not going to focus too much on entry patterns and that. In fact, you know, SC, Dante, people like that, real legends I was lucky to learn a lot under many years ago, would always say this. You know, people obsess over the entries, but as long as you've got a good bias, you know, you understand where price is most likely to head, then, you know, if you get in here, fine. If you get in here, it's also fine. You're just affecting your risk to reward. Greg, good morning, my friend. Wild. Yeah, absolutely. So guys, please do remember, if you've got anything you want me to take a look at, please let me know. Going to be making a list of these. I also have a very, very good friend of the show and a bit of a legend in his own right, one of our trading team, Just Pitt, who's just got, you know, just immense trader. And he's thrown me a bag of goodies to take a look at today. So let's take a look where they are. I know he's got a close eye on Doge, on Pepe. I mean, you know, OP as well. So let's put them on. So Doge, Pepe, OP. And when this guy says he's watching something for a breakout, I'm watching it as well, right? You know, I don't swing trade as much as I used to, you know, because I'm really, really focused on intraday trading. Apart from that, I spend a lot of time doing kind of a more ambassadorial role, I suppose, you know, like going around. I had the great pleasure of traveling a lot with Crypto Burb and our team here at TBN, you know, meeting people all across the world that are looking to kind of make this industry a better place. So OP as well is on his radar. So that is awesome. DYDX. Now, I really can't speak highly enough of these guys. DYDX, we had them, met them over in Singapore, strategic partner of ours, just a wonderful, wonderful crew. Just an exchange to be so focused on education and just making sure that the people that are trading with them are fully well equipped to do so. Will always have massive, massive respect from me. So a big shout out to them, and a lot more to come from them, I think, in the future with us. So please do stay aware. Also, want to say a huge shout out to Binance. Been a long-term partner of us at the Bird Nest, and just one of the most wonderful teams, some of the brightest people you could ever imagine. And just what an incredible milestone for them, right? So it's just unbelievable. They've hit 100 trillion in trade volume milestone, right? Really, really big shout out to them. Richard Teng, Rachel Colan. I mean, just I just don't know what else to say as well. I mean, like Deborah, who I met over there as well, just the most wonderful, wonderful people. So do make sure to drop past and give them your congratulations. They really do huge things to this industry, and I really have a lot of admiration and respect for them. So we will be taking a mix of those. If you've got any more, please keep them coming in. Joe C, AKT, no problem. Let's see what we're looking at. That coin, yeah, Alona, certainly be my pleasure. Okay, so before I rattle on too much, let me give you that's the very basics of range trading, right? And that's what an inside bar pattern is, right? Now, the key thing that I'm looking for in terms of range breakouts, which people often ask me about, is I'm looking for this initial move. Yeah. Hey, and speaking of the legend, you know, they say, speak of the legend and he or she shall appear. And here he is, Pitt. Absolute dude. I keep asking people to follow him, but people just seem to hate money, which never surprises me in this industry. So look, I'm going to pop it on here again, guys, and please look, just go and check his stuff out. You just can't argue with a win rate that he's been delivering. You know, swing trading, just tons of trades, crazy. I think over 1,000% on his biggest winner. But it's the consistency of the hits. You know, reminds me very much of when I was trading, like, you know, very much the SC style of swings. Just a really good understanding of key levels, momentum, and also just that ability, just a cold-eyed killer in terms of execution. A lot to learn from this guy, so please do give him a follow, and hopefully that should stay in the comments. So without rattling on anymore, that's the theory of the range right now. if we look at what we were looking at here, my expectation was shot a little bit from this. But this is why, we always have to be honest with ourselves, and we always want to make sure that we understand, because this is, look, we've got a 4-hour range here as well, right? So dialing this in, 4-hour inside bar, there's our mother bar candle, here's the inside bar candle. The forming of these two candles and the close of these gives us the inside bar pattern. Now, the first range are the two red lines, yeah? That's our inside bar range. It's a range within a range, right? But the black range is the key area that we've got here. Now, again, right, really, really simply, you run the range high, range low on these. Once you climb back inside, you're trading it back to the mid. So let me just pop a 50% on this range as well, because we don't ever want to be complacent. I'm going to do that in red as well, just so that stands out. All right, so as we go on here, choosing name is so hard. That is an awesome name. That's not just because you're giving me a big shout out, but that I love that. It is really difficult when you come into a saturated space like this to find something that you think sounds like good, explains what you do. Me, for example, yeah, mine's really, really simple. It's based around my obsession for dinosaurs, and anybody of you that are old enough might be able to piece that together. So here's our range, right? So let's apply the same principles as we did here. Now, what I said very openly, and look, everything we do at TBN is 100% transparent. You can see all of our trades. You get access to all of our calls, the explanations as to why, what's gone well, what's not gone well, and you get a transparent P&L. For me, for someone that has huge admiration and comes from a traditional market background in terms of my trading, things like the NASDAQ, equities, etc., this is what I want this industry to be all about. I want it to be about real people, helping real people, people with big hearts, people with even bigger brains that are all pulling in the same direction, which, to be honest, the infighting and stuff that goes on Twitter makes me sad and kind of a little bit like, meh. I don't really care about these people. There's people that I care about, and they're the ones that get my energy. But I tell you right now that if this space kind of stood together with the power that it has and supported one another like it should do, then that's what the very best people do. And that's what we do at TBN. That's what Crypto Burb does. Brings people around from all over the world with this ideal and the ideology that we want to make this world a better space for everyone. Look, it's old, corrupt, shitty governments and all this other nonsense that oppress people, right? Not each other. So just have each other's backs whenever you can, right? Learn from each other, call out the shillers if they're, or just delete them and ignore them and find the good content. Anyway, ran over. What we're looking at here is very, very simple. When we had this breakdown here, and let me show you where I was talking about, I was very open. I said, look, if we close outside of here, which we did here, yeah. So this was an evening trade on Monday. We're looking for these lows to be run. Weakness to be seeing a close outside of here. Wanted to see that passed. But my expectation was for price to take out this low, and we didn't get there. So I then backed that up and said, well, I actually think that's a big sign of strength that Bitcoin's reclaimed this level here. And I tell you as for why, because we swept liquidity below this low, which is the black line. We're going to take a look at this on the lower time frame. We had this beautiful pin bar with a short nose. Then we had a bullish engulfing candle. We had this corrected move lower because price engaged the midline. Yeah, engage this midline here, and look at the black line, how it keeps it underneath. Jackie, hello, mate. Sorry, I think I missed your hello earlier. Question, is the range you've marked based on the daily candle? Sorry, I missed it. No, actually, this one was on the 4-hour candle, but what's confusing about this is it's also a daily inside bar as well. So we have it, but on my focus at the time before this had closed was on the 4-hour, but this now is a daily inside bar as well. So the 4-hour inside bar was drawn with this is the mother bar and this is the inside bar. So that's how we got our two ranges. But you're absolutely right. If you look at the chart now post yesterday's daily close, we now have another inside bar telling me that price could want to range around here for a little while, which I don't think is a bad thing. Everyone expected the breakout, right? And there's nothing wrong with that. There's no criticism here. There's nothing but respect for, well, most other traders. I think there's an absolute pile of idiots out there as well, but I think you guys know who the real ones are that are doing the good stuff, right? So look, we had this, right? You had a bull flag here. We got the breakout, we got the retest, price pump, just didn't want to quite come and take out the 65k level, which was our key target. Now that's not a problem because we're now starting to range again here. By the way, if you want to check out patterns in that, very few better people than Crypto Burb and also one of his fellow CMT charter market technicians, Axel Kaibar. Just superb pattern trader. Anyway, so we're here. My expectation was for price to come and seek out this liquidity and maybe run this. And what I actually really wanted to see was for price to come and run. Oh, I absolutely fucking hate that thing, right? Come down here, run this, take out liquidity below here as well, get back above, and then that lead to the rip. We didn't get that. Now, I think that's potentially a sign of strength here that price didn't need to reach down for this liquidity below the lows of this range. But we've now run the highs, right? So look, again, same thing. Excuse me, deviation, price climbs back inside. Where do we expect? Midline. We're now at the midline, right? So we've exhausted that move. Now we need to see how price reacts. So remembering what I was saying before, if you're looking for breakouts of ranges, one of the things that really kind of helped me, especially in my early days of trading, was just looking to see how price reacts after the breakout. Everybody gets horny for the breakout, right? Big breakout, oh, bang, quick, we're going. Fine, look, often in these breakouts, they're higher impulse moves, meaning that they leave inefficiencies in their wake when they break out. So here we leave this bullish gap. So you can do one of two things. Wait for price to revisit this bullish gap on the lower time frames, and then wait and look for a structure sweep, yeah? So if you've got this here, what you really want to see is price come in, take a low, take that high, come up, and then that can be your entry line, right? If you don't see that pattern in here, then you just simply don't take it, all right? The other thing that you can do is wait for this level to be reclaimed. So if this is the high of the breakout and price is ranging here, no reason for it to hold here. If it gets back underneath, the chances are it's showing weakness. You wait for that initial move, see if it gets back above it. If, however, price takes that initial move, then gets above here, then this is your signal for go time, okay? Now, what we can see if we look at this overlaid to here, no, of course, it doesn't look the cleanest, but look, you get that move above it, and then what do you get? Like I said to you, you get the gap, the inefficiency and the pump up there. So you hunt these gaps for that pattern, and then this gives you your entry. Look, yes, you're entering a little bit late, but you're entering a lot safer. And also, you got to remember these kind of impulse moves here when they break out, price has been consolidating from here. Think of a spring, yeah? It just leads to that pop. I'm still surprised that price hasn't taken out the 65K level, but it is what it is. I still think that's the upside liquidity target. And that is where we are on Bitcoin, okay? This is always important to start with. Doesn't matter if you're looking at altcoins, whatever you're looking at here in the crypto space, this is the one that rules them all, right? So we need to know what it's doing. However, when it's ranging, not necessarily a bad thing, because alts can really pop off. So if it really wants to stay in this range, it's absolutely welcome to, all right? So let me just make sure I've got everybody's requests from back here. By the way, good morning, everyone. If I've missed your good morning, Thomas, my friend, hello, mate. Nit, lovely Nitpar. How are you doing, guys? Obviously, our legend Just Pit as well. I was about to say hello to host and then realized that's my own comment in there with Pitt's Twitter handle. So every time I give him a shout on this show, we have a few thousand people watching live, and I think he gets about 3 followers. So if I keep doing a shout out for about 20 years, then he'll probably get the follow account he deserves. But seriously, guys, don't take my word for it. Just go and look at all the trades he's crushing. You get access to all of them over at the Bird Nest, and you can join us at the moment as well. 14-day free trial. Come and check out what we do. Now, let's rip through. Yeah, I'll stop talking nonsense, and then, well, not nonsense, but I'll stop talking, and we'll rip through. We're going to take a look at the spot charts today, guys. We're going to focus on the higher time frame and see exactly where we are. So we can see from previous, this is a key SR level. Burns, my friend, how have you been? That is one hell of a wick we've got up here. That is an absolute beast. But we can see we've got an SR level here, right? So let's really zoom out. And let's get rid of this. We always draw these back in, right? Always good practice. Now, holy moly. Definitely a lot of upside to this, right? No, obviously going to look at this with our partners over at BitGet. Absolutely wonderful exchange, by the way. Really, really, really trying to make moves to kind of understand people, what they want, enhance the communities, get people access to really low trading fees, which I respect because as an intraday trader, it's massively important to me, but that is what it is. Not looking to shill anyone, just in truth, they're magic for me because they also allowed me to trade legally in the UK where other exchanges never got that UK-based license. So when FTX collapsed and I was a professional registered trader for FTX, it kind of left me high and dry really because Binance pulled out because the UK basically, oh God, I almost swore then, absolutely screwed their own economy because they're run by basically a bunch of absolute incompetent morons. However you look at it, new government, old government, etc. And it kind of left me without it. And then, companies like this came into the space and just smashed it and set that all up and then allowed me to a place to trade without being, having to go to Dexes. I love Dexes, love the crew over at Apex, people like Miriam and that, just wonderful, wonderful people. But before I digress further, before the ADD or the ADHD really takes hold, let's look at where we are with wild. Now, something that I want to just share with you guys is looking at candles, right? Looking at two things within candles. One, how if we're in a downtrend, yeah? So downtrend, that you want to see the up close candles defend price. Yeah. So I use the bodies personally. Other people train differently. I obviously only ever going to teach you what I do. So if I'm looking for a bearish order block here, yeah, this is where the supplier's price sells off here. When it closes below, I'm looking for this area here to get short, probably to fill these inefficiencies down here. The opposite is true of when we're looking to go long. What you want to see are the down close candles. If they're consecutive, I look for the consecutive down close candles. And then we're looking for those to support price. We close above it here. See, we get this beautiful retest, and that's what ultimately leads to this big pump. We then can say the same about the up close candle here when we come down, etc. Just go and try it, guys. Just go and see how. Because look, think of it in one of two ways. This is where people were buying really hard before the market absolutely obliterated. They're either holding those positions in drawdown, meaning that when you get there, the chances are that they are just going to flip their positions, close out at a small loss, flood the market with buy orders, and then send the market the other way. Yeah. So buy orders come in here, price closes above. These were the people that were selling hard. Price has now come back to their entry. They're like, actually, do you know what? We're wrong on this. We flip. And you can have many different theories on this, but basically just look at it as areas of supply and demand, right? Then if you mitigate those areas of supply and demand, what does that mean? Well, quite simply, if we take this area here, yeah, and we allow it even for the wicks, you see what a part this play is, right? So sellers stepping in here, big sell pressure, price closes above this area here, mitigating it. What do we look for? We then look for bullish signs like this bullish gap here to then say, okay, if that holds and supports price, an area that was once resistance has now flipped to support. Okay, basic support and resistance principles, just to give you a bit of insight on what we're going to be looking at. Aside from that, we'll be looking at gaps and how gaps affect the market, and also liquidity resting above old highs and lows. Now, I'm very, very interested in this because there's a set of equal highs here on a weekly basis. Let me just check the numbers on these. The high is 41,060, 41,148. Perfect. So that's perfect. Equal highs, right? A huge draw on liquidity. Also, this big wick here has filled the inefficiencies in the space here. So let me just make a note of that very quickly. Around about perfect. So I think there's a big reason for price to be drawing higher. I'm not worried about these gaps on the left now, and I tell you as for why, because they've been rebalanced by this long wick. Now, what I'm really interested in here is exactly what we've just been discussing. Now, on my charts, you'll see, excuse me again, guys, you will see the down close candles or up close candles. If I set an order block, I typically do it with a thick black line. I like my charts to be super, super simple. I'm a simple creature. I spent a long time over complicated markets for myself. And when I found, I don't even want to say edge really, when I just found what made sense to me, then, you know, I realized that I like to strip away all the noise. But, you know, you can easily just do what I did earlier, make that green. So you get that, you get that feeling that, okay, this is bullish. So when this close above here, I'm bullish this week on wild. It really is as simple as that. I'm not trying to enforce my will on the market, right? I'm just trying to decant what the market's telling me. Now, that's clearly capping the market to the low. Just going to do that in one color. Why? That was the swing low. Price took liquidity, failed to close below. Price take liquidity, failed to close below. What else can we look at? Let's look at the bodies of the candle. What do the bodies tell us? Well, SC taught me this more than anyone. The bodies are where price tried to get to. The wicks are where price tried to get to. The bodies are what was achieved. Yeah. So with this big bearish sell pressure, you shouldn't be fading that candle. You should just be going with the downtrend, right? This is indecisive. You can see price starting to get bought up here. And the other thing SC taught me was small body candles lead to big body candles, right? Small body candle leads to a big body candle. So as we consider that, we can see prices being capped to the downside. That means the buyers are strong here. This long upside wick tells me that this was just too fast an expansion. Price was not ready. It wasn't sustainable. So we had a huge pump and a huge dump that week. However, look what happens if you just measure the bodies. Yeah. So take the body of this candle. Let me do this slightly thicker and in tealy blue. Why not? Hopefully you guys can see that. So what does this mean? There's a few things that gave you an indication that price is ready to move here. If you take the body of the candle, if the body of the next candle closes above it, the chances are pretty high that you're going to get continuation there, right? Doesn't always mean the case, of course, as we can see with this one, body closed above this here. Ultimately, this then counteracted that and we continued the trend the other way. But it's something to keep an eye on, because that's another thing that played into the fact that it seemed to me like this week was going to be bullish. So as we then move on here and we're saying, okay, week opens up, we're holding this level. What do I want to see now? Well, we're holding this weekly bullish order block, right? That for me is just perfect. As long as we hold that area and we hold this bullish gap, then quite simply, I'm just looking higher. If we violate this gap and the very thin one below it, which I'll just draw in as well, we don't want to be lazy, right? Close below here. And quite simply, price is just looking for liquidity lower. And I like the look of this gap low. All right, a low within a gap. For anybody that's maybe studied Michael's stuff over the years, ICT, I was fortunate to be part of his original mentorship. Just learned a lot from that guy, learned a lot from other people as well. I'm not this kind of, ICT purist. I study traders from all over the world. I love to learn from people. And I think people that take this game really seriously will always tell you you'll never stop. You never stop learning. Close below this, we violate these. For me, these then turn into gap inversions. If we have gap inversions, it's again, if you notice around most of my trading, it's the idea and principles of support becoming resistance, resistance becoming support. This should support price here, right? Remember, that is currently green. So price dipping into this, the expectation is that price is now reaching for liquidity higher in the form of this. Yeah. So that's the key play for me on a daily scale. All I'm saying to myself is, look, if we continue up like this, we didn't quite close above this, setting the order block, which would have again given me just that much more confidence that price is pushing up. But, as the old school traders would say down in the pit, you buy when there's blood in the water. You don't really want to be buying into this euphoria. You want to be buying this move down. Why? This move down comes into a perfect bullish set, which is this bullish gap here. That gives you the opportunity to be long. And it also means that, let's say you're long from here. Well, you know exactly where your risk is, right? It's under here. Problem if you start going long from here is look what happens to your risk to reward. It just goes to absolute pieces. So that's always something to consider. So on a daily scale, quite simply here on Wild, I know I spent a little bit of time going over this one, guys, but it's just so that you understand the principles, because we are going to absolutely rip through the next lot. And take, you've got another 30 minutes here if you want them. If you want them, keep loading me up with charts and we'll get through as many as we can. So here, and just a quick reminder to myself as well, we need to cover the news. So unless we close below here, violating these, I remain bullish. Right now, we do need to think about this as well in terms of market structure: higher, 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 low, higher, 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 low. This could, we said several weeks to find out, be a lower higher setting as price breaks down. That would also play into the bearish bias. But for now, I'm bullish. This is the area I want to see hold. I'm happy for price to retrace down into this. And to do that, we're going to then give ourselves a little bit more granularity. Okay, we're going to move to a 4-hour chart. We're going to say, okay, well, what was capping the market here? You don't really see me do this often, but this is something that I do on a lot of charts. Right? This for me is a little bit steep as a trend line. I'm looking for price to attack the liquidity above this trend line. But I'm also using it in a way that I'm saying to myself, okay, well, what are the buyers? What are the sellers doing here, right? You can do lines of best fit. You can, trend lines are a little bit subjective, right? But for me, they do make sense. Study people like Trader SC, study people like Pitt if you want to understand good trend lines, right? So look, simple resistance here, resistance, resistance. Price closes above here. Look how it draws down into this level before it then gets the momentum to go higher. Books are full of images like this, right? Where you break out from a trend line and price does this perfect thing, and this line here gets support here, and this line here gets support, and then you get a perfect reversal signal at the top. Very rarely looks like that. I would always say to people, one of the best things I've ever studied in the market in terms of looking for trend reversals are gaps. Early stage reversals, you can often be told this with inversion gaps, right? So when price draws into a level, we take a sweep of liquidity here. Price then reacts. This bearish gap, look, resistance here. This closed through it. Look at the momentum, the size of the body. Retesting here. Absorption, can't push lower. Bullish engulfing is just your go candle at that point. But they're the principles. So what am I looking for at the moment? Well, quite simply, I just want to see these gaps hold, right? If price is going to move up from here, then we've got a bullish gap here. But the other thing we can do is add Fibonacci's to this. So depending how you draw your fibs, some people are looking for the structure break level. So we'd take this as the low. Other people would take the expansion leg, meaning this is the low. Just be consistent with it. I just try and do what looks clear and obvious, right? So if I'm going to do the expansion leg, I'm going to stick with the expansion leg. And if not, then I just make sure that I take the whole leg. Just don't flip between the two or you'll never find consistency. So what we have here, I'm just going to delete this. Well, no, I'm not. I'm going to leave this on here. I'll tell you for why. To show you how much stacked support is below us on a higher time frame. So for all these people flipping super bearish on their timelines, everybody has their own system, right? Don't berate anyone. I've seen people turn a few $1,000s into tens of millions using lunar cycles, for fuck's sake. Oh, goddamn, apologies. But look, that's what you just don't disrespect someone. Learn from them. See if there's something it gives to you. If it doesn't fit with you, then discard it. But never ever berate someone for their system, right? You don't know who the real people are out there making money, right? There's so many different ways to make money in this market. That's what's so amazing about it, right? And a lot of it comes down to the conviction to just back yourself and know your data. So here we got the expansion leg high. Where am I looking for? Well, first of all, the 50%. Love seeing price draw down into this 50% region. And for me, it would make a lot of sense to see price, come down into here just below the 50% before we get this recovery. Why? Because we also have a secondary little gap here, because this would start to get people bearish, because that's how people are. People are just waiting for this thing to go wrong. So we hunt longs in here or we hunt longs in here. So what does hunting longs in there look like? Well, quite simply, unless market tells you or gives you an indication it's ready to move, then just remain patient. What would you want to long in here? For me anyway, I don't mean that disrespectfully. If anybody's got an answer, I really do wonder. What I'm looking at here is this looks like a really nice tight consolidation. Yeah, if we take it to the bodies even, right? This looks like a beautiful consolidation, actually. This could very well be manipulation. In which case, if we're looking at this in terms of a power of 3, looking for this to be expansion. Yeah? So simple power of 3 model. Consolidation, price ranges away. You get the initial move to the offside. If price recovers this move, so we just look for a strong move out of this, test of this area, and up we go. If we don't get that, then quite simply, we just don't take the trade, all right? That's what I would be looking at. That would be my play here, because ultimately I'm thinking that price could easily correct lower down into here. Now, very quickly before we continue, I want to just share the news with you guys, right? And we will absolutely add ADA as well, mate. Of course we will. Let's take a look. Not sure if you're asking that, but I'll happily look at it for you if you want. Choosing a name is so hard. It's such a good name. You need to factor in the news into these markets, news cycles, understanding market dynamics as well, macro. If you really want to be a serious trader and investor, these things make a huge difference, all right? So if we just refresh this quickly, we're through here today. We can see that we are Wednesday, the 25th of September. We have no red folder news affecting the US, meaning that we can either expect a relatively flat equity market on the open or the pre-market, which is in about an hour from now, or the market can just do whatever the heck it wants. The thing that we want to kind of position ourselves for a little bit is tomorrow we have a lot of news. We've got final GDP quarter on quarter, right? That's a forecast of 3%. Previous was 3%. They're hoping that sticks. Unemployment claims. There's been a lot about that in the news at the moment, and this can inject a lot of volatility. A few weeks back, before I went to Singapore, we had this perfect storm of unemployment claims and retail figures came out much higher than people expected, and the market just absolutely ripped because retail figures being higher tell us that people are willing to spend again. It tells us that inflation's easing, that recession fears are easing. And then obviously the 50 basis point cut from the Fed was just like throwing fuel on the fire, right? So knowing these things allows you to position yourself likewise, because the traditional markets tell us what the major investors' appetite for risk is. And that's what we want to understand. We always want to factor that in. Anyway, be aware, Thursday, unemployment claims, final GDP quarter on quarter, but also probably the person that can move the dial the most is Powell. Now, he's only going to be talking about why they made the decision that they made to cut interest rates, right? But let me tell you this right now. The tone in which he speaks will tell you everything. If he feels that their decision has caused unnecessary impetus, unnecessary pumps in the market, there's a big scare there for the Fed, because they're basically driving the economy into a recession. That's their fear. If they cut too much, cut too fast, then, a recession is a lagging indicator. You want to speak to Crypto Burb about this. The guy is so knowledgeable. But if you look at it, I think it used to be kind of 6 to 9 months, the recession lags the data, right? Now, I think it's more kind of 8 to 12 months now that we see that. So that's the job that the Fed have. So if they feel like the market's reacting too well to this, too bullishly to this, or they call it hawkish or dovish, right, in traditional markets. So if he can come out and make some very hawkish statements, that means that he can say, look, we're very, very aware that we've cut 50 basis points this time, but actually looking at the initial impact on the data, we're probably not going to make any more rate cuts this year. That would be bearish for the market. That would be a hawkish tone, right? If he wants to give a dovish tone, which I doubt he will, it would give encouragement to the market. It would say we cut 50 basis points because the market's improving great. The job market's a lot stronger than we expected it to be. Retail's coming in very strong in the figures. And now what we're actually looking to do is we're considering a 50 basis point cut next, at the next meeting. Then you would see the market erupt, in my opinion, right? That's why I don't think we're going to get that. So having a knowledge of that, looking at that, or having a community like we have at the Burb Nest, where we have experts and analysts that kind of bring all this news to members, is really, really important. Because I can't tell you how many times previously I used to be caught in really good swing positions, only to just get obliterated on a death candle from Bitcoin that took everything else down with it. And I'm looking at that thinking everything was looking good, though. The news catalyst is there, ETFs are almost approved, blah, blah, blah. And then just realizing that, there'd been a huge move in equity markets because of a news release. Anyway, I know a lot of you don't really care about that kind of stuff, but it's very, very, very important to factor those kind of things in, or to just ignore them entirely. I knew traders that would just ignore news and everything entirely, but just kind of dipping in and out of certain news sources and out of others probably isn't the way to go. Arthur, thank you very much, brother. Very, very kind of you. Now, we see how this plays out on Wild. We're not going to watch it live, but what we are going to do is dive into some other charts. And we are going to now look at Doge. Yeah. Doge. Let's look with our partners over at Binance. And do you know what? Pitt just said to me this morning, literally, we had a conversation first thing this morning, just in the London session. He said, Doge, I just bought a massive bag of Doge down here somewhere or here. No, yesterday, I think he bought it down here. He said, this thing's just going to rip. Look at this candle. We're going to get Pitt on the show soon as well, guys. So we're going to really dive in. And I don't know if you saw that in the chat, Nit, but yeah, he said, so Nit's a long-term member of ours. He absolutely just loaded up on a bag. And actually, I didn't get time before going on the show, and I'm wishing that I'd kind of made time. But I did have steak and eggs, so it's a good trade-off. Okay, so weekly. Let's just get ourselves a nice clean chart. We can see levels we were looking at here. We can see that this level is currently capping the market. But look, it's not, this show's never about, oh, look what we did before. Weren't we right? Weren't we wrong? It's all washes through in the data in your P&L at the end of the day. What we want to do is create that. You want to save it. You want to save it as better names than this. But I do it just because I'm live, right? And I'll change it later. But just so that you get your old data on there, you go back and review it. You learn so much from your old data, from your old wins, your old losses. But trust me, mistakes are what you probably learn more from. So first thing I'm going to do is I want to zoom out. And I'm asking myself, what's the level kind of interaction here? What's kind of capping the market at the moment? There's kind of a level around about here, right? So if you're looking at this for kind of an SR flip, here, this is very clean. So you can see quite simply, what have we got? Resistance here. Support, deviation, price heads up to take liquidity, gets back underneath, finds resistance, kind of a not as clean over here, right? But you can see a big power move through here, support, price gets underneath, deviation, underside retest, and sells off. So this is a key level here, in my opinion. But it doesn't really matter at the moment because we can see that price has a fair way to go. So what's price done here? When we're looking at those previous principles we were talking about, we can see price is bullish, right? Remember, like I said to you, if you watch the bodies of the candles, this body far exceeded this body, meaning that we're bullish this day. This did exactly the same, closed well above it, so we're bullish here. If this closes above here too, then we continue to be bullish. And where I'll start to get really bullish here is if we close the week above this. Close the week above this, then, we've got a bullish order block here. This is telling us that the sell pressure has flipped and that we can look to this area to offer support. I like it even more because it's kind of come off of the back of a key liquidity sweep down here as prices started to move higher. Now, something I will definitely be aware of here on a weekly scale is this. So we've got a gap high. Yeah, so we've got a bearish gap here, which is capping the market. I'm not really worried about it here because it's been rebalanced to this high. So I think price has a pretty clear run on this high here. But something we do want to be aware of here is that we're currently arguing with the prior week's high as well. Yeah, which you'll see on my charts as PWH. We now move that down onto a daily. We can see here the prior week's high continues to cap the market. Let's grab that and chuck that in over here. All right, so again, a strong move and a nice daily close above this. Yeah, it's the prior week high, so we would, realistically, you want to just be seeing this impulse move above it, this area held, and then price up. In doing so, again, we would also create an order block here on a daily scale, right? So just zoom in for you a little bit. I'll draw this one back. Right, in fact, I'll delete it because we don't even have it yet, right? But this one here, down close candle, price moves up. Now, if we look at that again, look what happened here. See how this order block, these 3 consecutive candles here, price resistance, closes above, and see how it draws into this area, inducing, absorbing, and ultimately pumping. So that's what we want to see from this one here. Apart from that, really, same upside targets. I don't really foresee anything. We've got a very small gap here that price is kind of arguing with. If you wanted a little bit of extra confluence, in my opinion, then this can give you that. This bearish gap here that continues to kind of cap the market, well, you can see that if you get a close above this here, I think we've pretty much got a free run on 0.11546. I'm going to delete that just to make that a bit cleaner. And now we're going to look at the 4 hour. Okay. The 4 hour is kind of, when we look at this, is really balanced. One thing that you might, in terms of looking for liquidity targets and kind of looking down the line here and saying, one thing is that kind of looks quite tempting for a sweep. Stop losses below all of these that haven't been triggered, right? So if we are going to go up, like we kind of do here, price very rarely just kind of goes up from nowhere, right? You'll either see a sweep of a low like we get here. All right, price takes a low. It doesn't have to take one of the key lows either. Remember, these are still, have liquidity. In fact, you take that and you start seeing these absorption wicks, these long downside wicks here. That for me is when I'm thinking this thing's getting ready to rip, yeah? So sometimes just zoom out on the chart and just ask yourself, okay, do we think price was going up here? Look at all the long upside wicks. Seems like there's more pressure pushing this down. This looks like we're going to go up. Price ultimately does go up, but doesn't actually manage to find the final momentum. That's no problem. We lose trades. We have to lose trades. Otherwise, the market wouldn't exist. But then when you get this long downside wick and you say, okay, well, that was surely significant. There were surely buyers there because look at how he got bought up. But it just couldn't sustain the momentum. And then price ultimately fell away down there. And then when we sweep this one, you say, okay, maybe that's something of a little bit more interest. And you can use something like this as well. You can use something like an RSI, right? Not something that I use a lot or not something that I talk about a lot, but an RSI also, like a stochastic RSI as well. It'll probably take a little while to load because it's just something that someone much brighter than me built that I spent a while. I'm not a coder, right? But I spent a while kind of going through this with the code. And look, right, what happened here? See the way that this wick comes down? Just hanging around down, just kind of beneath the 50 line, yeah? Showing us that the momentum, you ideally want to see the sweeps of the oversold level, yeah? So when we get this move below, look at the RSI down here, showing you that this reset, the momentum's ready to rip here. Obviously, you need confluence with this. The RSI can look brilliant at times, but other times it can really trick you, right? When price is up in the highs here, it's overextended on the RSI, we're up in overbought. Price ultimately cools off, yeah? But look at this. The opposite is true here. We're down deep in oversold here. We see a recovery, but price it can't do it, right? That's why you'll see traders as well. And I've got no problem with this. This is how I kind of grew up trading, right? Under SC and people like that. But you see people that will draw these immense trend lines. And again, trend lines are a little bit subjective. Where you anchor them to, what you do. A lot of people will say, well, why wouldn't you have that as the trend line? Yeah, well, you absolutely could. Worked great, right? Price came in, confluence of support around here. Yes, you got a little fake out here that you got caught in, but probably not a great place to take this, just kind of hacking around the mid-level on the RSI. Price dips down, we get the recovery. And then if you use like triggers that you can have with consistently, like I said to you before, you look for these inversion gaps. which so often happen when we get these kind of changes in trend, then ultimately, you can be a buyer here and you know where you're wrong. You're wrong under here, or at worst, you're wrong under here. Okay. So in terms of that, looking here at Doge, the only thing that I'm kind of thinking, yeah, maybe it kind of, there's a chance we come down and sweep some of this first. So maybe we do something like this, tag into this liquidity and then make a move on the highs. I'm always kind of asking myself, where's the most damage that can be caused here? Where can we catch most people offside to generate that liquidity? One thing the RSI is telling us here, you can see with the immense bit of dodgy code that I put in here with the help of, and this gentleman, I believe, was called Fakira, by the way. Huge shout out to him. This is years ago, gave me access to this RSI. Used to be a big part of one of my trading systems. So one thing you can see here is the momentum indicators are disagreeing quite heavily with the price action. This is when we get divergences. Yeah. So this divergence, bearish divergence coming into here. Why? Because if we look at the price action from the same point, which is going up, when you look at it on the oscillator here, it's going down. Shows you that there's a disagreement between the two, and maybe the momentum is starting to wane. And then you're looking at that in the way that price can then start to correct lower down. So that's how you can use it. So again, maybe a little bit of a caution in here. But, we start seeing this thing move above. If you want to take some real aggressive positions, then quite simply, I want to see, let me have a look here. I want to see this hold. That bullish order block. It's not a high probability one. A high probability one for me would be one that is reacting at a gap or has taken, is engaging with a support or resistance level. So, for example, coming into this level here that's capping the market, as price broke down here, a slight concern that I have is this. We've changed our state of delivery, right? And this could very well be a high probability order block. Large up close candle, closed beneath, setting this, yeah, as an area that we could look for some bearish reversals here. Yeah. So what you want to say is, okay, unless price gets back above it, which is doing a tremendous job of doing at the moment, quite simply, you want to just monitor this area here. Yeah, if price is drawing back into this, we want to see strength. We want to see price back above this level. This is where we want to be buyers, right? For me, this is one of two things. This is the start of that recovery. Or very soon, we're going to see a gap here, and this gap is going to tell us a lot. Yeah, because if this gap fails to support price and price to move higher and it breaks down, then remember what we said, there's a lot of very tempting liquidity below these lows. Doesn't mean that it's over. Doesn't mean that the bull market's going to die or there's no resurgence in the bull market or however you see it. It just means that on an intraday basis or on a short-term basis, we just want to be cautious. All right, so that's kind of where I stand with Doge. I think I'd probably kind of allow my bias to kind of sit with the fact that we're holding kind of a bullish market structure here. But this kind of, this up close candle being closed below, bearish engulfing here, is telling me that if we violate this and close back above this, that's when I want to get in all the way up to 1.11546. While we remain below this, maybe we kind of dip a bit deeper, flip the market in the opposite direction before we recover. Right, just going to get rid of the RSI on here. I love it a bit. I used to use it a lot, but it really doesn't make up a big part of my trading these days. I use our in-house indicator, the Burbicator Pro, right, which I can cover with you on other sessions, and everybody that joins the Discord gets access to it. It's the one that Crypto Burb made himself that just, it's a brilliant swing positioning system, loads of different things. It's basically an all-in-one trading system. But I like to test myself with price action, right? So Doge, hopefully that was useful and wasn't too convoluted, I suppose, for want of a better term. Now, let's rip through. We've got 5 more to do, and we're going to just absolutely rip through these. Let's look at Pepe. Pepe on the weekly. Here we go. So this is what we were looking for. You look at all this old historical data, right? It's so good. That was what we were looking to violate. Violates, what does price do? Sells off. So that's a key area. But again, not really interested in going over past stuff with you guys. We want to do it all. Well, I like doing it from fresh, right? Just gives us a fresh perspective. So what are we looking at here? Quite simply, similar case with the candles. Bodies of these candles are closing below the other ones, meaning that we are bullish. Where's the liquidity target? Well, the kind of key liquidity target is here, all right? Because that's the key high, and it's within a gap. So it's a gap high. I think price is drawing up towards that. On a daily scale, what are we looking at here? Well, daily scale, again, is looking quite good, very similar. We've set the bullish order block here. So watching for this to hold and for price to move higher. If we come back down, if we start closing below the order block here, then I think price makes a move deeper towards the liquidity resting below the prior swing low. Looking to finesse this here on the 4 hour, actually really nice and simple. Again, day of order blocks today, right? Get me back above this, close back above this on a 4 hour scale. And I'm going to be chasing down 0.50s or 6 zeros, actually 986 here on Pepe. However, I'm really not against Pepe having a slightly deeper correction here and engaging with this fair value gap, right? Which is an inefficiency that hasn't been filled. Price had come down, sweep liquidity below the lows, regain the gap, so there's just a wick below and not a body, and then ultimately again take people offside before price looks to pump. We don't really have any lower term triggers here, but something that we might be looking at across here is this larger order block being set here on a 15-minute, but I would be cautious with this. The only reason you're seeing some gapping here is because it's on a spot contract. But in terms of Pepe, really, I'm just looking at this on a 4 hour and saying, I want you above here. I certainly want this level to hold. If we dip into this and recover this level, I consider being a buyer here above 0.50, 1, 2, 3, 4, 6 zeros, 842. Okay, so that is Wild Doge Pepe OP. Okay, so one thing I immediately see on OP that I really like is this gap inversion, right? So this should have been resistance. This has now turned to support. Okay, strong close above it. In that strong close above it as well, we've set this order block. Actually, I'm pretty on board with OP. I think OP is going higher here. I think this is the cleanest chart that we've seen. I think I'm going to get myself some entries on this today and target this up here at 1.989. Yes, it could be higher. Yes, Bitcoin could screw me. But when you see a chart, like this, it just looks too good. Connor, soon your problem will not be with crops you bought. It will be you wish you had more after the market goes parabolic. Yeah, it's absolutely true. Look, I'm not telling you to go out there and buy this stuff, right? Just buy whatever your risk tolerance. The key thing is don't buy more than you can afford to lose. Expect everything to go to zero. It's not a negative mindset, but just allow yourself that peace of mind. It will stop you stressing out, getting up at night. Look, some crypto can do 100x. Yeah. Yes, you'll think, oh God, why didn't I put $1,000 into it? Why not put $10,000? If you just got $20 or $40, right? That doing even 10x, you do that across enough little bits. First of all, you don't really worry about losing that $10, $20, $40, or some of us don't. Some of us really do. So just put in what you can. Find the best exchanges, find the best communities. Come and try us out at the Bird Nest. We'll teach you how to do it. We'll teach you how to manage your money. We'll hook you up with all the very best exchanges for your country, for your profile, for your cost, your fees, so that you're in the very best position to be able to action these things. Don't over leverage yourself. Don't take yourself out in one go. But yeah, look, where do I want to be buying this? I want to be buying it here, right? I want to be buying it here, or I want to be buying it down here or down here. If it goes to zero, then that's it. So what? Still better than going down a casino, isn't it? And just throwing the thing all red and black and only having the chance of the return being so minimal. This is where you want to buy it. And if crypto completely tanks, everybody always says crypto's dead. Look, we've got ETFs now, for Christ's sake. No way this industry's going away, in my opinion. And regulators will become more and more open to it. The reason the market's down here is because they want to buy what you've got and they don't want to buy it up here. That's what I would say. Here we go, guys, from the Ghost in the Machine at the back, 12-day free trial available for everyone. That's full Discord access, all of our calls, indicators, training materials, education, courses. Just come and just engorge yourselves, right? After that, we put on an incredible sale price at the moment for everybody to stay. If it's beyond you financially to do it, you can sign up with some of our ref links and still get free access to all the calls. But just give it a go. All right, just give it a go. That's in the description. It's also in the chat if you're interested. So why am I so horny for OP at the moment? Because of this. That weekly looks sick. So the daily, again, we're going to overlay the same things right now. I would have liked to have seen, and this is ideal world stuff, and crypto doesn't really give us ideal world stuff that often. Would have loved to have seen us tag this gap, rebalance this space here before the expansion. But look, at the end of the day, broken record time for you here, ladies and gents. But look, this was the order block that was up here. That is still very, very prominent. All right. Now, yeah, it was the order block from before, but we also set this order block here. Right. So the order blocks are the daddies at the moment. Order blocks are crushing it for us. Just simply, let's just watch for this to hold. That is 10 new buyers are here. That is absolutely ripped. if you're wrong, you're wrong. But if you're in at the right spot down here, then you can de-risk very, very quickly in this market. And that's why teaching people about entries and stuff like that can be so important too. So want to see price close above here on a daily scale. And then I don't really think there's anything stopping before 1.989. No, I like that. Basically rebalance that gap. This thing just has a free pass to get to here. And then when it's up there, I think we can go a lot higher on this. I mean, look at the upside. Yeah, the upside is freaking huge. All of this waiting in there to be tapped, right? So let's just take a look at the 4 hour. And I really like this. This is what I like to see, right? So look, we've left the high intact over here, leaving this as what's known as a failure swing, right? So let me just get rid of this for a minute because we haven't set that yet, right? So when you see a high like this, and basically leaves relative equal highs. They don't have to be perfect, but this high and this high. This is a failure swing, not a swing failure. Swing failure is when price comes up, takes the high and closes back below it. Yeah, fails, takes out the swing, fails and breaks down. This is a failure swing, meaning it's failed to take the swing. Often these areas are then smashed shortly afterwards. What I really like is we're holding this bullish gap. Momentum looks to be on the side of this one. So where am I a buyer here? Okay, so I'd already be a buyer. So I can't get into this now, unfortunately, because we're just halfway through this move. But again, look at the long, almost like a trend line, right? Look, well, it definitely is a trend line, yeah, but you can see like this. If you anchor it to those two wicks there, or if you anchor it to that one and that one, price broke out here, nice bullish engulfing candle, and now it looks to be well on its way. Not a problem. You can't win them all, right? But I really like this. And remember, like I was saying about before, look at these overlaying confluence, higher time frame bullish gap, 15-minute bullish gap. We get the movement, we get momentum into here. Where's the high that then comes down to take the low? So this is the area that you want here, right? In fact, if you draw it in, that's the high I'd be interested in there. And often if you draw these back across, you can see how they become like a key support and resistance level. Resistance, bullish engulfing close, support closes below, resistance, gets back above. This is a bit messy, but I think this is kind of the consolidation before we see that pump higher. If you're in this one already, and kudos to you if you are, I'm sure Pitt is because he's been going on about it this morning, I'd kind of just want to see this little order block here hold. Yes, we've got some inefficiencies here that are left on the market, but we're starting to flip these. Yeah, so 15-minute close above this becomes an inversion gap. That should hold us as support. Start breaking down below that, you can then look to mitigate your risk. So that's up DYDX. Let's have a look at our friends over at DYDX, shall we? What have we got going on with these beauties? 57. So on here, oh my lord, this has got some upside potential. I'm liking the look of this. So the reason I might sound so excited to you guys, by the way, is because I don't really get out much when it comes to the swing trading anymore. My biggest honor probably in my life, in truth, outside of personal achievements, but including most personal achievements, was to have the opportunity to work with Crypto Bourbon, this amazing team we've got at the Bourboness. I travel with them a lot, love meeting people over the new world, love spreading the word of TBN, love making crypto the very best place it can be, bringing transparency to a very opaque space. So within that, I have to really focus on my specialty, which is intraday trading right now. Intraday trading, I'm obsessed with it. It suits my personality type. I love to teach it. In fact, we're going into a session in 15 minutes with members where you'll be trading live with me for the entire afternoon. But I do love swing trading. It's where I cut my teeth. And looking at the charts like this, I will never, ever not be excited to look at these things. Why am I excited by this? Just look at it. Look at it. How does this go any lower than this, right? Really, really simply, this is the low. Why? Because even the very best projects can just get crushed by Bitcoin and the wrong market conditions. What do I really want to see here? Well, really simply, to get me really, really, really into this as a buyer, I want to see this area, which is currently red because it's a bearish gap. I want to see price close the weekly above this. And then I'm going to be silly long, I would say, into 1.236 area, and then above that up to here where we've got a gap high. And let's be honest, there we're already a couple of R up, if not a lot more, at 1.476. And the upside is just look how small that is compared to how far this can go. In fact, after this full exposure, full exposure, hopefully not, full disclosure, I'm just going to go and buy a bag of this actually. Yeah, not saying you should do it as well, but for me, this just looks too good here. I just, you can't be not buying this down here, I think, for me, especially after getting to meet the team out in Singapore. Just really, really, really incredible team. So that's what I'm looking for there. Going to delete that for a minute and then just get a little bit more context on the daily, because the daily now is really starting to shape up. We've ripped liquidity below these lows. Price has recovered that level really nicely. Small deviation. Now we can't close below it. That's capping the downside. This here is very much the catalyst that has now led to this pump. And again, when you're looking for this, look at the momentum in markets, right? Don't be scratching around these tiny areas trying to find the smallest little slither of a gap, some slippage, whatever. Look for the clear and obvious expansions. There was big buying volume stepping in. And you know what? I probably kicked myself in the backside here because I never really use volume on these things. But, look, big volume candle here. You can see it rising up here. Volume, volume, volume. Look, there's some people out there that deal with volume 100 times better than I do. It's not really my game, but what I'm telling you here is that buyers stepped in. What else happened here? We set this order block, right? What's now supporting the market beautifully? The confluence of this pump, this gap where the buyers stepped in, this order block. Why did we get the move lower into this gap? Quite simply, people over leveraged into this position late when they saw the breakout. This move typically is designed to take them out, and then price looks to move higher. We've now set a secondary order block here as well. So that's the level I want to see hold here at 0.974. Going to get rid of that. We know that's our kind of line in the sand, right? But we want to make this nice and clear. We have inefficiencies here in the market that are drawing price higher. Yes, we could reject in them, but all we want to do is just use the lower time frames to tell us, okay, what do we need to see? I actually like the fact we've got this down close candle here and price is closed above it. Yes, we're now back below it. Not really got a problem with that because I'd be more than happy to be a buyer in this gap as well. Yeah. So what I'll probably do after this, I'll probably come down, run a deeper set of TA, and then I'm going to take a look in here and just see where I would want to be a buyer here, right? So I think this is a good place. I think some more bids down there as well, but happy to start accumulating this here. I think that's actually a really, really good one. Okay, a couple more to do for you, and then we're going to wrap this up because otherwise it's going to be late for me live trading. So AKT, USDT. Oh, okay, so we've got the perpetual contract on here as well, have we? Awesome, but we haven't got the spot. No problem. Let's look at the perps. Real quick, high time rundown. Okay. Not telling us much here, although this is a level I'm very interested in. All right, the high of this, launch high, right? Price closes above. Want to see this area hold. That's pretty much all that we've got there on the weekly. Again, this is the line in the sand for me. I think we need to hold this level here. I think we hold above this. I think we can really look to rip. Apart from that, again, the key thing here was then when we kind of shifted structure here, we reacted from this bullish gap and price pushed up. Again, we can see the roles that the order blocks play here when you get these strong closes above. You don't always get a perfect retest, but you do see the absorption from these lows with the wicks. So this is a little bit more of a lower time frame play for us here. And for me, this now shifts very sharply into focus and very clear focus, right? Which is this. This gap is currently holding price. It's been rebalanced. As long as it holds, I don't really mind. We also have this bearish gap above us. So on a 4-hour scale, this is the perfect play for me. This is a bearish gap within a bullish gap, right? Close below the bullish gap here. And I fully expect us to chase down this level here at 2.754. Then we watch what the reaction is here. Close above the bearish gap here, which the top of that is 2.894. And then I think we hunt down this wick here. By that point, we can secure our risk because we have a stop loss under here. And then we chase this higher. I think that's just the most simple play that we could ask for on that. And then coin. Oh, hang on. Okay, so what have I done wrong with that? Can someone give me the ticker for coin? I thought that was Coinbase's. Well, I know that it runs on like the NASDAQ. I can certainly have a look at it on NQ for you, but you won't get much good data on the lower time frames, right? It'll be a much higher time frame play, but quite simply on a traditional market aspect, it's really, really simple. want to see price above this. Yeah, there are joined gaps, but this for me is the kind of real key thing here. If we look at this now on the daily, we can see that the first kind of real major gap here that I want to see price overcome is this. So it's within this. Close above this, I want to see this flipped to support. And then this is where I'd look to be a buyer. And ultimately, I think we've got a really good chance of kind of heading up and closing in some of these very small inefficiencies here. But also, we've got all of this untapped liquidity resting there. And this looks a little bit like a breakout here if we look at our trend line as well. So that's where I'd be on coin. And then on ADA, we've got all of the old squiggles on here. So I'll just zoom out a little bit and show you what we're thinking about these. You can see some old market testing where we're building our systems out in the algos. Yeah, for me, just really solid support resistance levels. What I want to do is just want to get all of this and then just hack this in as old data. And then in the next 2 minutes, we're going to finish this up and I'm going to run across to start our live trading session. But let me just rename that one later. Just make a little note on my very futuristic post-it notes to change these sessions to something that I can remember when we're moving forward. Quick sip of tea, fam, and we'll finish this up. 2,500 of you live with me today. Absolute blessing. I appreciate every single one of you. Even the bots. So, ADA, where are we? What's going on? How can we be involved in this? Why do we want to buy it? Just if it looks good for me on a technical scale, that's what I'm looking for. This here for me stands out like a sore thumb right away. This is a beautiful bullish gap that is supporting price just simply perfectly. Yeah, wick below, liquidity taken, bullish pin bar, set us in motion, bullish pin bar here, set us in motion again. Now we're looking to move. What I really want to see on a weekly scale is this. No, not that actually. Look, these can be a little bit unclear sometimes, right? This is good displacement. From here, I'd be looking to long to these highs, right? Now we can see we didn't get that. We can get that for a number of reasons. Bitcoin can disagree with us, which is fine. But once we do this, once we get that, once we close back below here, my expectation is then that price is going to purge a little lower. All right, so I'm now not really interested in this level. What I am interested in here is this high and what it looks like on the lower time frames. The reason I wasn't interested in that gap is because we'd already violated it. When we close back below it, it then becomes irrelevant to me. Nothing is 100% in crypto. You're lucky to get anything that's 90%. And if you get anything that's 90% in crypto, then the chances are you've got a very high break-even rate for a lot of your trades, like we do over at Trade Club. We can boast a 92% win rate since March, but a lot of those trades are break-even. But we have built 54R in winners since then. If you doubt it, you're more than welcome to just come and just watch all the live shows because they're all recorded live. So, bullish engulfing, set this little order block here. Why would I not consider that order block over this one? Because this is a much larger one and this is simply within its range. Yeah, so this is the key one I'm after. Big pump, nice. We've also now got this fair value gap inversion over here, which is beautiful because we can now look to this area to offer us support. Yeah, so tomorrow, what I'd really like to see, I don't mind today consolidating, right? We got no news as well, so there's no real major catalysts heading into the market today to inject volatility, which is fine. However, if this price closes around here tomorrow and we get this bullish gap, I would love to see price draw into this and then rip for the highs. Quite simply, this would then give me my line in the sand, which means draw into here and rip, or close below it, violate it, and then we head for this low, and then these relative equal lows lower down. It really doesn't get any simpler than that. However, we don't have that yet. Yeah, so no point, enforcing our will on the market when what we can see here is we have these beautifully well-respected bullish gap here, well-respected, and now price is currently respecting this gap here on the 4-hour. So as we look at that, this for me became, boom, line in the sand, super simple. This should be offering support. This should be offering support. Very, very simply, as we just saw previously, we also have this bearish gap just snuck over the top of it. So perfect. Close back above this on a 4-hour scale, which we'll find out in pretty much 3 hours, 49 minutes. And then I think we make an inhibited run at this up here. Close below this here. I'd be cautious because of the higher time frame nature of this support, but you need to remember, price can do this on a 4-hour scale, recover that. And when you zoom out to a daily, that's nothing more than a wick, below support. This only gets violated if we close below it, right? Price can quite comfortably wick down below and recover this. And on a 4-hour chart, people are starting to get bearish because we're below this level, but they've lost the high time frame context. All right, legends, look, please do come over and join us. If you're not part of it at the moment, thousands of people over there, education-based community. You get calls from a trading team that haven't been profitable every single month for the last 2.5 years. Certainly since, it sounds a really arrogant statement, certainly since I had the absolute blessing of Crypto Burb promoting me to the head trader for this team. And that's not down to me. That's down to the legends that we work with. They make my life very easy in that respect. We've got a wonderful community. You can come and learn everything that I'm teaching you today and more. But also, if you don't have access to this kind of stuff, just make the most of the free trial. Then you can go and use. We have loads of free access. We have free materials on our website. We've got loads of stuff. All of these shows, for example, including my education ones, are shared on YouTube. You can find them all for free, as well as all the education in my channel, which is BC_Richfield. And everyone at the Burb Nest. Again, I would just like to say a super special mention to some of our partners who were pivotal in us having the most amazing time in Singapore. Binance, BitGet, who were absolutely huge for us. Apex over there, just one of the most exciting decks in the space, is being, with two of the most incredible women I've ever met in my life behind that project. In fact, most of these projects have incredible women behind it. Some of the brightest, most engaging people I've ever met. And, I'd like to say a big shout out to Raul, who organized Crypto Fight Nights, for example, my bro, Trader Dank, and, just everyone that kind of came out for it. It was a really, really special event. Got to meet so many amazing people, got to meet some fans over there, got to meet some friends, got to meet some amazing companies, some new companies. This industry can and will change your life if you work hard enough within it. Find your niche, find what you're good at, find where you can add value, and just focus on meeting people that have got good hearts, good minds. Yeah, just ignore the toxicity or just get away from it. All right. Anyway, preach over. Peace out, you all. Have a fantastic week ahead. Please do keep an eye on that Red Folder News. You can use our website for that as well, the Burb, BIRB, We've got an economic calendar on there. You can see all the important news that's about to drop so you don't get caught offside. You can also get access to our crypto screeners and all other goodies, all for free, that will help you trade and also help you stay in tune with these markets. Thank you all so much. It's always a blessing to be on here with you all. 2,500 people live today, and that, I believe, is just through Twitter. Thank you so much. Have a fantastic week ahead, and I look forward to seeing all of you legends around.